Good morning, everyone. Welcome to our Tuesday morning trading room. Hang on here a second. We'll get the screen share going on. Okay. A brisk start here this morning. Saw a little bit of a flurry just off of the opening bell. Yesterday's session, funny thing, thought it was going to be a sleeper all day. And then in the afternoon, especially toward the close, the market goes into a bit of a, well, tailspin might be a strong word, but it certainly retreated, got into that opening gap, that large opening gap that we saw. So the better trading opportunities actually coming yesterday afternoon, which is a little bit unusual. Normally for the North American markets, we tend to get the best opportunities during the morning session. All right, here we are now, though, pretty much taking over from where trading left off yesterday. You can see the overnight relatively quiet, not a whole lot going on there right now. And we are producing a couple of signals here out of the open. Here is our first. Oh, look at that, right on the opening buzzer. Our first in-sync eagle signal. I know I said I was going to start doing this signal, but sorry I was a little bit late, but it looks as though that one's tracking nicely. Certainly it's got the trade to far enough into the trade that you can manage your stops somewhat, either take it to a break even, or given the larger brick size here in the Eagle, I would probably recommend bringing your stops up at least below that last swing. And if this bar finishes bullish, then certainly you can consider a break even. But a good start so far on that first in-sync eagle signal. It looks like the first in-sync raptor signal already at its profit objective. So that one working out quite nicely. And so far everything is in sync. All our tools, the scalper, the swing trader, the trend trader, and the raptor, all looking fairly bullish at this point. So we'll see what they're able to do with that. The first few minutes of trading, a lot of times can be a little bit hectic. Opening range, technically for most traders, consider opening range to be the first half hour of trading. A little bit of a pushback now. Yeah, and Antonio's asking for the pound US dollar pair. Hold on a second while I get that chart loaded. And we can certainly take a look at that. All right, so here now oh, hold on one sec. Okay, here we go. Here's the British pound against the US dollar. With the Forex markets, you're going to need to play with your settings a little bit. What I've done here to reduce some of the noise is I've actually gone to some larger settings. The nice thing about the Raptor is that it is more tweakable than the other DTS tools. So the Raptor actually allows you to play with the settings a little bit to get it to a certain level of responsiveness that is correct for you. But generally speaking, I always start with the defaults and then I work from there. And what I'm looking for is I'm looking for two things. First off, I don't want to see the session break lines look like this, right? I don't want the day break lines. I don't want to have 4 days worth of trading here because it's going to be virtually impossible to day trade that. If you're going to do it from a position trading point of view, sure, that's fine. Go with those settings. But if you're going to be day trading, obviously there's not enough opportunities within this day to actually trade something. So for day trading, we need to see a few more opportunities. The other thing I pay attention to is the time axis here across the bottom. I don't want to see the bars unfolding too quickly because it's going to make it very difficult to make a decision. So normally, like I say, we start with the defaults and then we go from there. But I think you'll find that with the Forex markets, because some of the trades develop so quickly, you're probably going to want to go with a slightly larger brick. All right, so let's go back here to the London Open, which I think was right about here. We're opening London Open. We get a number one signal. You could also have qualified this as a hard edge bounce because market came all the way back to the hard edge. It did print as a number one signal, however, because the clouds got twisted up here and then got back into sync. So your number one signal printing right here. And boy, that was a gorgeous move. Look at that. For the next hour and a bit, the market just in a very strong move lower. You get a couple counter trend signals here. Now you always have to be cautious with the counter trend. With counter trend signals, there's a trade-off. You're trading off the probability of a successful trade for the ability to keep your stops much tighter. Hold on a second here. I had a little problem. Usually I always go with the risk percent mode. Oh, okay. I got something messed up here right now. I won't deal with it right now. But normally what you're doing is you're offsetting the smaller risk for your probabilities, right? It's less probable that this trade will work out given the very, very strong trend. So something always to bear in mind when you're looking at doing a counter trend type trade. All right, where did we go from here? Came back with yet another number 3 signal. And this is characteristic of a trend where we get the pullback to the hard edge and then we get a continuation signal. And oh wow, the market actually continuing lower. At this point, I would have started getting, honestly, a little bit suspicious that the trend was still going to hold, but there we go. So the British pound, very bearish through most of its session. Looks like they had a little bit of a recovery here as we get into the North American Open. And now we're starting to go a little bit flat as the trading day in Europe slows. But some very nice signals overall. This number 1 signal printing here, that you can see why it's important not to keep your trades overly tight, even though most times when the signal prints, you can see there's immediate momentum, immediate follow through. That's not always the case. Sometimes the signal will print, there'll be a little bit of a hesitation before the market finally decides to move in the direction of that signal. But it looks like it was a fairly decent session for the pound overall. Here to start with the North American Open, we did have a reversal signal, a little bit more sideways chop, and now it looks like we're going to produce that number 1 signal to short. Antonio asked, the 20 ticks would be somewhat equivalent to what time frame? I usually use the 3-minute chart. Hold on a second here. Let's build a 3-minute chart for the pound US dollar. All right, so let's see, this bar here, oh, we'll do the one prior, went from a high of 29.62 to 29.57, 62 to 57. Yeah, actually, it looks like it would be roughly equivalent to a 3-minute chart. I know some of the Raptor owners who don't subscribe to tick data will use a 3-minute chart to simulate what's going on the Raptor. The Raptor will work on time frames, by the way. So if we throw on here a 3-minute chart, it will still produce the signals. Once again, you may have to do a little bit of adjustment with the parameters. This one's not bad. Yeah, this one's not bad. We're actually getting some decent signals printing here. Sometimes what happens when you move to a time-based chart is the lines or your bands get really, really thin, and you're not producing hard edge bounce signals. You're only producing number 1 signals as the clouds cross. Let's see, did we get any number 2 signals here? Well, we did right here, but it was only a visual number 2. Yeah, so if you're playing with if you're thinking about going to a time-based chart for the Raptor, you'd probably have to play a little bit with the band settings to get it to where you want it to be. And there's a rough relationship between the trading bands and the brick size. Let me show you that while we're on this. So for those of you who are thinking about playing around with the Raptor settings a little bit, this is how you're going to do it. So you're going to go to your Raptor version 2.0, and you scroll down here to your cloud setup and your hawk bars. Now here is the rough relationship between the clouds and the brick size. So with your brick size, your fast cloud is usually the same size as your brick size. The slower cloud, the bigger cloud, is 1.5 times the brick size. And then the hawk bars are 3/4 of your brick size. So that's kind of the rough relationship. That's your starting point, and you can work from there. The only other setting that you may choose to change are the signal parameters for the soft edge cell. This is your number 2 signal. So the retest sensitivity, the larger this value, the less discriminating the number 2 signal will be. In other words, you will generate more signals. And then the inverse is true of the minimum bar setup. The lower this value, the more number 2 signals you will produce. You can change some of the things visually on the Raptor, but these are the main nuts and bolts where you can play with the programming a little bit to customize it for the market that you're following. But yeah, there's the pound US dollar pair. And it looks like, well, we did have a signal here. It did not trigger just yet. Getting a little bit of a pullback. So the band at the moment a little bit more bearish. We may see it actually just continue back and forth because, of course, it is the end of the European session right now. Or not exactly the end, but they're starting to wind down a little bit. Okay, so let's see here. The market on the NASDAQ seems to have a bit of a bullish bent to it again this morning. What time is it? Oh, okay. We're kind of past that quarter to the hour mark where very often the market likes to throw me a knuckleball. Yeah, no problem, Antonio. Antonio saying thanks, Eric. You know, folks, don't be shy about asking questions because this room is here for you. It's for answering things that you don't understand or just trying to help you get a handle on your trading tools to make you a better trader. Hopefully, I can show you a good trade or two as the morning goes on. But ultimately, you want to get to the point where you're calling the shots. After all, it is your money. Oh, darn, I was just about to point out this late filter entry signal right here. Just about to try to get on board that bad boy, and it ran away on me. So here, the late filter entry signal on the Falcon, a very strong signal for the most part. And a signal that you can tend to be relatively aggressive on. What happens with the late filter entry signal is the filter goes out of sync and comes back into sync. Very important. And the trend line never changing color. You're going to find that when the trend line is relatively flat, it's going to tend to have better follow through as well. Oh, I don't know. Did they hit the profit target there? Looks like they just kissed it before backing up a little bit. You can see here, according to the support and resistance suite, we're kind of stuck right in the middle between the primary resistance and well, for the most part, the primary support. It looks like we did take a bounce off of the secondary support line. Antonio asks, Eric, I assume I can have the Raptor loaded on as many charts as I want? Absolutely. As many as you want, as many as your screen will allow. Yeah, there's no limits to how many charts you can run with the software. The license is good for one computer, and then of course there's discounts if you want to put the software on other computers. But no, look at as many many different markets as you want. Now, just a word of, well, I don't want to say word of caution. Caution is too strong, but from my own personal experience, and you can take that for what it's worth. I'm not convinced that there's more money to be made by following more markets. We all have this tendency that we feel we have to be busy to make money. And that's true in the non-trading world for the most part. If you're not busy doing something, you're usually not earning money. But trading is different. In the trading world, being busy, sometimes not only are you not making money, it may actually be costing you money. So I tend to be more of the mindset where I try to find the best opportunities. And to that end, I strongly recommend a trading quota where you're only trading, well, when you're starting out, when you're only trading once a day. And then as you become more proficient, 2 or maybe 3 times a day. And what that does is it takes a lot of pressure off of you. Because let's face it, there's no shortage of signals. We have the high probability signal here, but look, we had other signals. And every time a signal prints, it's time for us to make a decision on the signal. Because we know eventually one of these signals are going to fail, or the market's going to enter a sideways phase, in which case we may see several signals fail. But if you're looking at the market with the point of view, is this one of the best opportunities I'm going to see today? If you were trading for Goldman Sachs or Bank of America or Citibank, they're not chasing every single signal out there. They're looking for the best opportunities to put their money down on, and you need to have, or I would encourage you to have, the same kind of mindset. So that takes a lot of pressure off trying to find a whole lot of signals to make money, and rather focuses your attention on, is this going to be one of the best opportunities I'm going to see today? And if you think it is, like you're looking at, say, here you're looking at the hawk and you say, oh, hey, that's a first micro macro cross. I think that's a good opportunity. I'm going to try to trade that. Then you go ahead, you put your order in, you control your risk, and you, as the carnival barker says, you pays your nickels, you takes your chances. All right, so that's where you want to come from. You want to come from a position of control. And once you're able to do that, once you're able to find those 2 or 3 high probability trades a day, then you increase your earnings, not by finding more signals, but rather by increasing your capitalization. So you saw up here, if I risk the trade like that, I've got $300 at risk. I've got 1 contract in play. But let's say I'm able to trade more money via a larger account. So I'm going to just bring the stop in closer to demonstrate it. But you can see by trading multiple contracts how your earnings increase. So you don't need to trade more often, but you do need to trade more quantity. And that's always going to be relative to what you can afford. So it's important to build yourself up. And if you can consistently make $100 a day trading, and that's, you know, finding 2 $50 trades or one $100 trade, after that, it literally becomes a numbers game. It seems too simple to be true, but honestly, the math does not lie. And I know there's people in the trading room and who have been in the trading room in the past who will tell you the same thing, that restricting how often you trade and getting yourself into a position where you can trade more volume, that's the true secret to trading. But it's not sexy, so nobody talks about it. I call it the best kept secret on Wall Street, and certainly the professional traders don't want you to know. They want you to keep trading. Certainly your broker wants you to keep trading. Yeah, okay. Antonio says I usually focus on 4 currency pairs. Yeah, that's fine. You know, I don't want to sound like I'm, you know, preaching down to you because I'm not. We're all different. As my wife will tell you, I am not a multitasker. I cannot multitask. I usually have a hard enough time doing one job at a time. But you know, it's I just want to impress on you the importance is not finding more, but rather finding the better opportunities and capitalizing on those. Okay, that said, I was waiting for this hard edge bounce, and this one ran away on me as well, so I better get a little bit more serious here. So we had a nice hard edge bounce here on the Eagle. It looks like that's since found its profit objective. And we had another corresponding hard edge bounce here on the Raptor. So a nice trend. It looks like the market's trying to establish a trend. We actually had a number 2 signal here. I'm not entirely sure why it did not print. Obviously, it fell out of the programming parameters, but visually, it's still a number 2. Came back down here to the hard edge, which is usually the target for the counter trend signal. And then we came back with a very nice continuation signal, very nice hard edge bounce. This is practically textbook right here, folks. So this morning already, 2 or 3 excellent opportunities, any one of which could could already make your quota on the day. Stephen makes an excellent comment here. He says, as the NASDAQ was charging down, I shorted the YM. That's the mini Dow, for those of you not familiar with the symbol. But it never really moved down, and I got stopped at break even. And then the YM seemed to lift the NQ. Marsh Jones, you may have heard me mention him before. The late Marsh Jones actually had a trading strategy where he noticed a correlation between not so much the YM and the Dow, or pardon me, the Dow and the NASDAQ, but rather between the Dow, the NASDAQ, and the E-mini. And what he noticed was if there was a spike in buying or selling on the Dow and the NASDAQ, he usually had a couple 3 seconds to get a corresponding order in on the E-mini, that the E-mini was actually lagging by a few seconds. Now, you're going to find that between the $5 instruments, the NASDAQ is much more volatile than the YM. The mini Dow is a little bit more staid, a little bit more conservative. The NASDAQ, the NASDAQ is like a wild child some days. It can just be all over the map. But Marsh never even watched the charts. He would just watch the order flow. And if he saw a spike in orders, like I say, on the NASDAQ and the Dow, he would throw in an order on the E-mini, and he did pretty well with that for the most part. So it doesn't hurt to watch another market. I used to watch the bond market relative to the E-mini because there tends to be an inverse relationship between bonds and the E-mini. So if the E-mini is going up, you usually expect bonds to go down and vice versa. If you're watching the Dow, sometimes it's helpful to watch crude oil because there seems to be a direct relationship, a loose direct relationship between the Dow and crude oil. So if crude oil is moving up, then sometimes you'll expect the Dow also to move up. And while we're on the subject, the DAX in Europe, the FDAX, DAX is the symbol, FDAX. Some traders swear by the DAX that it is a leading market, even for North American markets. I haven't really found it to be so. Sometimes the DAX will just do what the DAX does, but like I said, some people will swear by it, that the DAX actually leads even the North American markets. So there you go. Take it for what it's worth. Yeah, Stephen says, if I lived in Europe, I'd trade the DAX. I used to like the Stocks 50. That's STOXX 50. That's the kind of the European equivalent of the Dow Jones. And then, of course, there's the Bobble, which is like the bonds, the German bond market. Yeah, Stephen says, I live in the slums of Santa Monica. You're just going to have to tough it out there, Stephen. All right, back to the hard edge, and whenever the market encounters the hard edge of the trading band, we anticipate a reaction. Don't always know if it's going to be a big reaction, but we're pretty sure there's going to be a reaction of some sort. I would think a retest of the high is in order. So there may be a buying opportunity come through here. I'll tell you one thing I don't like to see is when the legs of each move start to overlap. So if the next leg only goes like this, what it shows you is, yeah, okay, there's still some buying going on, but they're not making any progress. Rather, they're just going over the same prices. And that very often will precede a reversal. Not always, but often. Okay, so we're back here around, like I said, the hard edge, 76.70. I don't think that was a big number yesterday. No, it wasn't. Well, I think that's where the opening gap was, 76.60. That's why it sounds familiar. 7,700 was a relatively influential number yesterday. I think the market spent a lot of time around 7,700 to 7,720, if I remember right. A couple of comments here while we're waiting for the next setup. Mark says, I have a separate custom chart that looks at the correlation of the E-mini, the YM, crude, bonds, the Russell, the NASDAQ, and the GS. Wow, what did you leave out? Sometimes it helps. Most of the time, though, I only look at it if I want to see the overall market sentiment. Otherwise, I trust my favorite setups and trade accordingly. Oh, yeah, okay, gold, GC, GS. I almost thought Goldman Sachs have its own index now. Some people will watch, what's it called now? I think it's the Philly Bank Index. There's so many things that traders will look at to try to get an edge, but I think Mark makes the appropriate comment here. He says, otherwise, I just trust my favorite setups and trade accordingly. Trading is a business where you will never have all the pieces to the trading puzzle. It's just the way it is. You're always going to be making a best guess given what's going on your charts. So, try to not go down that rabbit hole where you're forever trying to tweak your system to eliminate all bad trades. As the famous trader Ed Sequoia put it, if you don't want any losing trades, stop trading. And this is from one of the best traders of modern times. Let's see here. Steven says that was a nice signal at 9:58. Oh yeah, right here. That was. He says, but I don't like trading near 10 o'clock. It's like you don't like to trade at 9:45. No, I do not. Yeah, just as you get into the end of the opening range, things can sometimes get a little bit dodgy. The market does tend to move in half-hour increments, though. Don't know why. It's just a tendency, I suppose. So, of course, there's the open, and then a half hour later, technically, the end of opening range. A half hour after that, if there's been a dominant trend on the morning, very often you will see a bit of a reverse or a reversal attempt an hour in. And then again, a half hour after that, as they kind of get into the early part of the lunch hour, sometimes you will see a move also. The rest of the time you can go grab a coffee, check your emails, do whatever. Yeah, Mark sums it up right here. Losses are a part of the business, but like all business losses, learning how to manage the trade and minimize the loss as much as possible is also part of the business and critical to your success, I would add. One of my favorite trading quotes from Paul Tudor Jones says something to that effect, and I'm just going to paraphrase for you, but essentially what he says is that too many people are focused on profit, on pie in the sky, as he put it, and not on protecting their capital, protecting their assets. Well, I don't know how aggressive I want to be on this. I've got a hard edge bounce, red bar buy here on the eagle. The cloud pretty much skewered here at the moment. What I would be looking for at this point is a retest of the high, because it's not likely for a market to make a quick reverse like this. Now, there is a good chance the market is trying to reverse. You see how we took out this low right here? Technically, we made a lower swing low relative to this one. And this may be a retest of this high, but normally the way the retest happens is we see the market rally up and then fall short as it tests the high or low. Now, of course, it doesn't do that all the time. If it did that all the time, it would be far too easy. And I've got a second push on the signal now. I don't think I would interpret this as a rule of three. This is a very, very small retest with the eagle, of course, and the rule of three, which is the counter trend signal. The key component is, or one of the key components, is that you have the retest of the high. All right, I did start with a loose stop on the trade, but because this is the eagle and we've got a little bit more in play, I am going to run a much more aggressive stop on this trade. We got a bit of a sloppy counter trend signal here on the Raptor, really not one that we could take advantage of. It's one of those signals you'll see in hindsight and you'll say, oh yeah, look at that. It's one of those signals that somebody will, I'm going to take this trade to break even. It's one of those signals that someone who is trying to cherry pick a trade, which I always find amusing in some of these trading webinars and whatnot, where the fellow goes through the chart and he says, "Oh yeah, I would have, I would have shorted way up here, and I would have bought way down here." And you just know he would not. All right, well, let's see here. Am I being too aggressive on the trade? Are they going to give me the swing? I really don't want to have too much in play at this point in case the market fails. But I do think we're going to see a little bit of a pop up here. Come on. Play nice. No. The proper place for the swing is actually back here. Pardon me, the stop is actually back here. But I didn't have the nerve to leave it back there. Like I said, when the market starts to just go over the same pricing, when it seems like the momentum is fading, I get a little bit leery. Well, it wasn't a loss, but I fear that maybe I punched out of that trade too early. The broker will be happy. Got to keep the broker happy. When your trading band becomes very, very tight like this, when things start to twist up like a rope, very often that's an indication that you're going to enter a bit of a sideways trading range. So a little extra caution may be in order. I have to admit, though, the early buying flurry that we saw, although I guess we did get a couple of swings, didn't we? We got the swing lower out of the gate, then we got the rally back. I was going to suggest that maybe the buyers were a little bit stronger, but I forgot about that initial move down. Okay, well, here, speaking of the buyers, here we come with yet another crossover buy signal. This is now the number one signal. Let's see if we get a second push on this one, or if they're going to run away on me. Oh, come on, give me that second push. All right, that might be all I'm going to get as far as the second push is concerned. So the second push signal What we're looking for is we're looking to see where the market is reacting, kind of the current limits of the buyers. And this is a strategy you might employ when you suspect the market may be moving a little bit sideways. The idea is, of course, to not get you into the trade unless there is some serious momentum. The downside to this strategy is this scenario where the market never really looks back and just goes boom, boom, boom all the way. But I don't know, to my way of thinking, sure, a missed opportunity is an opportunity cost, but it's not a loss. Not really. It didn't really cost you. And those times that you see the market, when you suspect it's starting to get sideways, produce a signal and then just flounder or even reverse, you'll be grateful that you employed a second push opportunity. All right, here we go. Let's see if they got any giddy up. All right, I can always enter that signal again. I think I'm going to close that trade and just put it back on the shelf for now. Okay, we're flip-flopping a little bit on the signals now. And once again, that's just kind of characteristic of being in a sideways range. That red bar buy signal, maybe I did get out too early. Okay, here we're coming with a follow-up signal or a pair of follow-up signals. As you can see, this signal right here is the same one that printed on the Raptor, the number 1 signal. Let's go back there. And they're now the number 3 signal. So, oh, shoot, I'm just going to buy in now because the market took out the high there. So let's throw the stop back here. And hopefully we'll get a little bit more follow through on that. Let's go. Giddy up. So this number 3 signal corresponding with the eagle buy signal that we were just looking at. We also have a first micro macro cross signal here in the hawk. And even though it's not technically a late filter entry signal here on the Falcon, the filter going out of sync for only a bar, I would probably still consider that to be a late filter entry signal or a variant thereof. So the big obstacle for the trade right now, the high of the morning, 76.82 3/4. Unfortunately, I got the later entry. I would have much rather tried to get this trade here near the hash mark. Just because logistically, as we get closer toward the high, we're going to see this. We're going to see the market reaction. And had I gotten the earlier entry, it would be a little bit easier to manage my stops at this point. But oh well. If I get another bullish bar here, I can start to roll my stops. Okay, so I'll just manually bring my stops up a little. All right, so a little bit of a pullback now to the hard edge. Here we come back with yet another number 3 signal. I could bring my break-even trigger in back toward these highs if I was getting a little bit anxious on the trade. Here we go. We hit this little swing high. Don't stop now. Oh, don't you dare. Get up there, you stinkers. So obviously we're seeing a little bit of a reaction now to the high of the morning, right? The high of the morning, they're thinking about it. Okay. So I'm going to enable my ATR strategy as the market bounces off of the high. And you should expect reactions like that because obviously there's some selling up here, right? That the sellers brought the market down before, so they're going to try to short it again. If I can ride out this swing, there's a very good chance the market's going to try to break that high of the morning and get into yesterday's trading range, in which case we could see a move back to 7,700. No, didn't get it. A move back to 7,700 would be my target, and you can see we actually have a resistance line at 76.95. But didn't quite get there. Still, it was a good trade. I think I probably managed it as well as I could, short of taking all my profit on target. And now we're just sort of in limbo again until we see what's going on with the high. So there's a danger, because the market's reacting to the high, that we may be in a trading range. And of course, if we're in a trading range, we expect sellers to be up here, buyers to be down here. So the best strategy to employ is to actually let the market break out of the trading range, look for a retest, and then some sort of evidence that the market will continue in the direction of the breakout. Likewise here to the short side. The hawk's starting to get a little bit more neutral here. I don't like to see these yellow bar clusters developing. Although here on the Falcon, we've got another late filter entry signal. Let's see if I can get on board that one. So here, the late filter entry, I would actually classify both of these signals as the same. We've got back-to-back late filter entry signals. All right, are they going to push through? All right. we go. Come on, giddy up. Like I said, you could, if you wanted, you could extend your target here to 76.95, which would be the next resistance zone, as the market very likely to try to get back to 7,700. I think that's pretty reasonable. And maybe even 77.09 3/4. That would be a monster move. Now we're seeing the reaction as the market breaches the high of the morning. We'll see whether the buyers are going to make good on that breakout. Well, look at this, the filter out of sync yet again. Not exactly what I want to be seeing at this point. Oh, the Raptor actually producing a counter trend signal. And the Geiger counter also bearish. So, you know, it's a bit of a stronger pullback on that breakout that we saw. See, just that little itty bitty breakout. Got a lot of sellers excited. They pushed the market back inside the trading range, which might suggest that it was a fake breakout. Can't really do too much with my stops just yet. Look at that. They're just going back deeper inside the trading range. So there is some hope of recovery before 76.70, but they better step it up in a hurry. On the off chance the market actually does rally from here, we will produce another number one signal on the Raptor, but I'm not holding my breath. Well, actually, maybe that would help. Okay, it's starting to go up a bit. Okay, that's all I can do. This is where the buying initiated before, that's why we want to have our stops back here. And as I mentioned before, it's not unusual to see the market challenge the first swing point, but normally if it takes out the second swing point, you can be relatively sure you're on the wrong side of the trade. What I do not want to see is the market just breach the second swing and then reverse and head higher again. All right, here we go. The buyer's going to make a little bit of a push here. Maybe. Well, things definitely slowing down here. This last half hour, 45 minutes, the market was very brisk. Okay. Looks like they're going to make a run at it. Are they going to hit the break even? Okay, got the break even and oh, whew. Wow. Okay. That was maybe not the luckiest trade I've ever had, but I have to say I feel pretty good about it, about the way I placed my stops and the way I kind of gave the trade a chance to come around. Now that we're through here, like I said, 7,700 would be the next target, and it looks like we're going to reach up here at least to the next resistance line at 76.95. But I'm okay with that. Like I said before, if you were looking only for your high probability trades, your quality trades to take advantage of, well, there was one right there, and essentially my trading day could be done at this point. That was done on a single contract. So, if I wanted to earn more, it's not about finding more opportunities, but rather capitalizing more. And now, like I said, here we're getting the big push up to, they're flinching a little bit, just shy of 7,700. Here on the Raptor, we got ourselves a nice follow-up signal. That number one signal, actually a little better timing than the late filter entry signal on the Falcon, which I ended up buying through here somewhere. But we got the number one signal to tell us that the trend was in sync again, and a very nice follow through. Another thing that's sometimes easier said than done, but if the market is trending, or if it's at least paying off in one direction, you probably want to favor that direction. rather than, trying to buy one signal, trying to short the next. Yeah, that worked out well. Everything was pretty much in sync on the trade for the most part. It was a little bit out of sync here on the hawk. I see we had some red bars cropping up. After that, it went back to yellow bars, and then finally the follow through higher. Nice little first micro macro cross. Would have developed rather quickly, but even if you had gotten in late, looks like it would not have been a problem to be profitable on that one. And at the end of the day, turning a profit is what it's all about. Well, yes and no. Stephen here makes an interesting comment. He says, "I know it was a signal, but it was a low probability signal because as the trend continues, each signal gets weaker. The earlier signals are usually stronger." Now, you are right about that. I would agree with you 100% that the early signals are usually strong signals. What happens though is when the market, it's not going to be as obvious here. Let me take a look here. When the market hits the period of consolidation, as it did through here, these consolidation periods are something to look out for because they always precede the next move. Right? The market will tend to consolidate. Sometimes it's a big one, sometimes it's a little one, but there will almost always be a period of consolidation before the next move. And you can do this yourself. You can go through your chart and you can find these consolidation periods. And what you'll find is that very often the bigger the consolidation, the bigger the move when it finally comes. Notice, however, you don't need to rush. See the breakout, the retest, and now here is the signal. This is textbook right here. You get the breakout, the market comes back, and you get the signal to short. Where we are right now, now that we've seen the breakout, there will be a retest somewhere through here. But when you hit those consolidation periods, just be aware that very often the market is building up for another move. Now, I would agree 100% that if we're in a long established trend where we see, we have a move and a pullback, another move and a pullback, another move and a pullback. At this point, after about 3 or 4 legs lower, I would start to get a little suspicious about the strength of the trend. On a tool like the Eagle, you'll typically see, well, 2, sometimes 3 moves before reversal. This must have been an exceptional trend because we actually got 5 legs lower. Let's see, how are we doing to the upside? So here's leg number 1. Here's the break. This is now leg number 2. That might be all that we're going to get out of the Eagle. A third leg might be a bit of a stretch. That was a nice move up though, so I would definitely favor the buyers, I think, at this point. So if we see another pullback here to the hard edge, I think it might offer a reasonable buying opportunity. We are very close to 7,700, and I do remember that was an influential number yesterday. Once we're above 7,700, what was it? 7,720 was also a big number. Although it didn't highlight as a support and resistance line, actually went to 7,732. That's going to be, like I said, that's going to be a monster move. A lot of times when we see a breakout above a primary resistance zone, we can expect the market to move two zones. So somewhere up here near 7710, I think would make for a pretty strong day today. But right now, we're getting a little bit quiet again, and no doubt that's because we're creeping up on the lunch hour break. All right, gang. I've actually got an online appointment I need to get to in a little while. So if anyone has any questions, please type away. Otherwise, we'll button up shop here for the morning. All right. We are getting a counter trend signal, but like I say, the trend seems reasonably strong. The target for the counter trend signal is the hard edge of the trading band, which would essentially be the retest of the breakout. I'm not so sure I want to commit to a short signal at this point, just given that the buyers seem to be controlling the market today. I think I would favor buy signals as a rule. All right, everyone, I will see you again tomorrow. We'll talk to you then. Bye for now.